Hello students, let's look into the next question, that is Hari and Hara are partners sharing profits and losses in the ratio of 2 is to 3. Their balance sheet as on 31st March 2014 was as follows. So this is the balance sheet and their total is 1,53,000. On 1/4/2014, Manikanta is admitted into partnership on the following terms. He pays rupees 25,000 as capital. Goodwill of the firm is valued at 32,000 and goodwill account is to be written off. The new profit sharing ratio is 3 is to 3 is to 2. Reduce stock by 10% and increase building by 15%. Provision for doubtful debts is reduced to rupees 1,000. Make a provision for damages against the firm to the extent of rupees 400. Prepare revaluation account, partners capital account and new balance sheet after admission. So, Hari and Hara are the old partners. Profit sharing ratio is 2/5 is to 3/5. Manikanta is admitted and he is bringing rupees 25,000 as capital. Show this in partner's capital account. Next, goodwill of the firm is valued at rupees 32,000. So first and foremost, distribute this 32,000 in 3 is to 2 ratio. Show this in partner's capital account on the credit side. Later on, the question says goodwill account is to be written off. So same 32,000 you need to write off in the profit sharing ratio, which is 3 is to 3 is to 2. So show this in partner's capital account on the debit side. Further, reduce stock by 10%, which is 35,000 into 10%. Increase building by 15%. So the value of building is actually increased by 15%. Show this in revaluation account on the credit side. Provision for doubtful debt is reduced to rupees 1,000. Provision for debtors is 3,000. Instead of 3,000, now they are reducing this to rupees 1,000. So actually it is a benefit. So therefore show this in revaluation account on the credit side. Make a provision for damages against the firm to the extent of rupees 400. So this is nothing but you're creating a provision for damages is nothing but a liability which is actually increased by rupees 400. Show this in your revaluation account on the debit side. So in your revaluation account, you need to show point number D, E and F. Likewise, in partners capital account, you need to show reserve fund, capital of the partners. Likewise, the capital bought in by the new partner, distribution of goodwill, writing of the same goodwill. In case of balance sheet, you need to show creditors, bills payable, reserve fund reflecting in partners capital account, new capital of the partners Hari, Hara and Manikanta. In case of assets, opening balance plus you need to show the capital rupees 25,000. No changes in bills receivable. Stock is actually reduced by 10%. Provisions is actually reduced to rupees 1,000. No changes in furniture. Buildings is actually increased by rupees 15%. Finally, make sure that you will show provision for damages in the new balance sheet on the liabilities
Preparation of revaluation account. The first adjustment is reduce stock by 10%. So reduction in stock is a decrease in the value of asset written on the debit side as to stock account. Stock value is 35,000 into 10%, 3,500. Increase building by 15%. So increase in the value of asset written on the credit side by buildings account. Building value is 30,000 into 15%, which is nothing but 4,500. Provision for doubtful debts is reduced to rupees 1,000. So debtors value is 60,000. There's provision for doubtful debts, which is rupees 3,000. So the question says this provision itself is reduced to rupees 1,000, which is actually nothing but a benefit to the business. So therefore write it on the credit side as by provision for doubtful debts account rupees 2,000. For you to understand, 3,000 minus this 1,000 is rupees 2,000. Make a provision for damages against the firm to the extent of rupees 400. So provisions created for the damages is nothing but an increase in the value of liability. So two provisions for damages rupees 400 written on the debit side. Total is 6,500. On the debit side, total is 3,900. So let's write the highest amount, 6,500 on both the sides, minus 3,900 is rupees 2,600. Let's distribute this revaluation profit among the partners. Hari, his share is 2 by 5 into 2,600 is 1,040. Hara's share is 3 by 5 into 2,600 is 1,560. So if you add 1,040 plus 1,560, you will get a profit of rupees 2,600. Make sure that you are writing this information in partners capital account on the credit side. Preparation of partners capital account. First and foremost, let's bring down the capital of the partners, which is available in the balance sheet. So write it on the credit side as by balance brought down. Hari's capital amount is 40,000. Hara's capital amount is 37,000. We have reserves. So let's distribute this reserve fund among the partners in their profit sharing ratio, that is 2:3. So 16,000 into 2 by 5, 16,000 into 3 by 5, which is 6,400 and 9,600. That's it from the balance sheet. Let's post revaluation profit. Hari's share is 1,040. Hara's share is 1,560. Money has to pay rupees 25,000 as capital. So let's show this transaction through bank account, which is rupees 25,000. Goodwill of the firm is being raised and valued. So let's distribute this goodwill of the partners in their old ratio, which is nothing but their sacrifice ratio. The goodwill amount is rupees 32,000 into 2 by 5 into 3 by 5, which is nothing but 12,800 and 19,200. Now the same goodwill is being written off in the new profit sharing ratio, which is 3:3:2. So writing off the goodwill is done on the debit side. Write it as 2 goodwill account in the new profit sharing ratio, which is 3:3:2. Nothing but the same 32,000 is shared in the profit. So 3 by 8 is 12,000. 32,000 into 3 by 8, again 12,000. 32,000 into 2 by 8 is rupees 8,000, which is shared among all the 3 partners. Now do the balancing of partners' capital account. So starting from Hari, on the credit side, if you add from 40,000 to 12,800, the total is going to be 60,240. Likewise, on the debit side, it is going to be rupees 12,000. So let's write the highest amount, that is 60,200, on both the sides. If you reduce 12,000, we are going to get a balance carried down amount 48,240. So 2 balance carried down. Bring down the same amount, 48,240. Next, Hara. On the credit side, if we add from 37,000 to 19,200, his total is going to be 67,360. On the debit side, if you take Hara's amount, it is just 12,000. So let us write the highest amount, that is 67,360 on both the sides, minus 12,000. Carried down amount is 55,360. Bring down the same amount, 55,360. The last partner is Manikanta. So Manikanta's only amount is 25,000, whereas on the debit side amount is 8,000. So let's write the highest amount, that is 25,000 on both the sides. 25,000 minus 8,000, carried down amount is 17,000, brought down amount is rupees 70,000. So please remember to show this as the partner's capital in the new balance sheet. Preparation of new balance sheet as on 1/4/2014. So let's start from the credit side. The first item is creditors. No changes, 55,000. Bills payable, no changes, 5,000. Reserve fund we have already distributed among the partners. Let's write the capitals of the partners. Hari, 48,240. Hara, 55,360. Manikanta, 17,000. On the asset side, the first item is cash at bank. So first we will show the opening balance 21,000 500 plus we will add the capital bought in by Manikanta, that is 25,000. So the total is 46,500. The next item is bills receivable, no changes, 4,500. Stock value is 35,000, which is actually reduced by 10%. So 31,500. Debtors value is 60,000. Provision for doubtful debts is now reduced to rupees 1,000. So it is going to be 59,000. Furniture, no changes, 5,000. Buildings, value is 30,000, which is actually increased by 15%, 34,000. One last item that we need to record on the liabilities, that is provision for damages, written on the liabilities side. Provision for damages, rupees 400. That's it with the postings in the new balance sheet. Let's check if asset is equal to liability plus capital. If you start adding from 55,000 to 400, the total is 1,81,000 on the liability side. Likewise on the assets, 46,500 to 34,500, the asset total is 1,81,000. So that's it with the preparation of new balance sheet. Thank you.